You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know where Vol is? Let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com. So as, of course, from the ever scintillating, at least we tend to think so around these parts, Options Insider Radio Network. You guys know the drill by now. If you're one of our legions of on-demand listeners, doesn't matter the platform you get. If you like what you hear, if your platform allows it, some don't, but if your platform allows it, try to rate and review. Really does help all the new folks. Obviously, we're once again heading into interesting quote-unquote waters out there. So people are looking for a little bit more info on markets and indeed volatility. So if you like what you hear, rate and review does help new folks continue to discover the show, which is great to see. The show has been running for nigh on a decade. And yet still new folks discovering volatility and VIX and spikes and what all this crazy stuff means. So let's usher them into the world of vol together. Then, of course, if you want to go above and beyond, you want more content in your lives than the roughly 2 shows a day we're hitting you with now. You want to get pro Q&As. You want to get options oddities coming up after this show. We got Tony Saliba coming up in our next pro Q&A before I head down to the southern environs of Texas for the OIC conference next week. So a lot to look forward to. If you're amongst that category, listeners, then, of course, you want to go to theoptionsinsider.com/pro, or for you cool kids out there, /secret club. Remember, don't tell anybody about that last part. It's just a secret. It's just me and you talking here. And let's see who's joining us on the program today. No MIAX folks out there today. I'm pleased to say I did see all of them in person, sometimes for the first time ever. I haven't seen Shelly outside of doing the show virtually in a couple of years. I haven't seen most of them. I haven't seen Simon in person in quite some time. Simon was in town even from Australia. They all had a big MIAX Spikes event right down the street from the studio last night. So it was good to see everybody. Nice of them to bring Spikes to our door here in the studio. Why should I travel? They all travel to me. It's very nice. So it was great to see all of them. Tom was there. Matt was there. Pretty much everybody. It was good to see them all. They've all had quite the extensive evening last night, so no MIAX hot seat today. But they'll be back joining us. I think I'm going to see a lot. Oh, John was there. Yeah, everybody was there. I think I'll see a bunch of them down at OIC next week, so I'll see if I can wrangle some of them for the show next week. But, who is joining us from the Southern Volatility hot seat? I think he's mostly recovered. He is none other than the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. How are things in the Southern Volatility Mecca?
Mark, it's good to be here. We live in interesting times, and this market has been wild this week, hasn't it?
This has been an intriguing one. Some might say a week like this was why the show was created to begin with. So a lot to unpack. Let's get there. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show we break down the week that was and indeed still is. A lot going on right now from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives, breaking down some of the new products, the latest additions to the world of vol. And what's going on right now is yet another great example of why you can't really prep for vol views too far in advance. I tried to save it until about half an hour before showtime today, listeners, and even that was too far afield because this morning it looked like we were heading into, after, of course, coming off the heels of a nigh on historic down day, which if you listen to Vol Views, we kind of discussed that possibility on the show last week with myself, the Rock Lobster, and Mr. Jem Carson over there from Kai Volatility Advisors, the prospect of a rally immediately after the Fed announcement and then kind of a return to what we've been seeing of late, a lot of red on the screen. And that is pretty much what we saw play out over the course of this week. And it seemed like after that nigh on historic sell-off yesterday, it seemed like we were going to continue that business today. S&P was looking pretty dark, looking pretty dreary. Didn't quite threaten the 4,000 level, but it looked like it was going to. Got down to about 4,075. And now, since we pretty much have been leading into showtime, we have seen pretty much rally ho mode yet again, getting back to close to unched. Most of the major indices are still slightly down, but way off their lows from this morning, listeners. So we are back once again, very firmly in that tug of war, that yin and yang between, hey, the bears have the bit in their teeth. They're really coming for this market too. Hey, the bulls saying, wait, back off. There are some optimistic stories, and we're going to drive this bad boy up. So we got ourselves a market out here, listeners, which makes things oh so fascinating. Coming into the start of the show, we saw spikes and VIX cash both easing back from their highs on the day. We had VIX. Let's see, how high did VIX cash? VIX was 35.09 earlier this morning, listeners. And we're kicking off the show a wee bit lower than that, 31.5 when we commenced our festivities here. That's still up about 0.75 of a point from where it was this time last week, but ever so slightly. If we continue on this trajectory, probably going to be unched on the week pretty soon, if not down by the time we start heading into the weekend. So yeah, a lot of madness, a lot of fits and starts. Spikes, same deal. Spikes, when we kicked off the show, was at about a 31.75, up about almost half a point, about 0.4 of a point. That one hit a high of 35.01. So spikes and VIX cash, once again, kind of playing fast and loose at the hip now after moving beyond the madness of the dividends. And then VVIX, so the vol of vol, at about a 120 when we kicked off the show. That's actually unched from this time last week. And it used to be in the old days, in the pre-pandemic days of this show. I know it's hard to think back that long, listeners, but in the pre-pandemic days of this show, there used to be kind of a floor and a nice kind of healthy range to VVIX. And it was usually, once you got down to about 75, which we haven't seen that in forever, obviously. Once you got down to about 75 in the VVIX, that's starting to get a little low. You're probably looking for a pop in vol of vol. And when you got up to this level, around 120 or so, that seemed to be the upside bound. You could obviously blow through that, but when you got up to this level, things were pretty frothy. You had to pay attention, and chances are it probably couldn't sustain that level for long. And then, of course, lo and behold, on comes the pandemic, and we can hang out at 120 plus for a long time. So kind of blew all of that out of the water. Well, we're back at that 120 level, listeners, and we're hanging out there. We were there a week ago, and we are there yet again right now. Our other friend, our other vol of vol friend, V-Spikes, a.k.a. the Viking, when we kicked off the show, is at about 150.5. That puts it up nearly 6 points. About 5 3/4 points from where it was at this time last week. So a lot to unpack. Mr. Meatball, we haven't had a chance to chat with you on Vol Views in a couple of weeks here. So maybe let's go back a little bit further. Let's go back to, the tumult that we saw last week. What were your thoughts on this week, of course, going into the Fed number? What were you looking for? What were your thoughts on that crazy rally we saw coming out of it? And then the equally, if not more aggressive sell-off after that, and now this kind of tug of war we find ourselves in today, sir. A lot to unpack.
Yeah, it's interesting. We were down a lot. We were below 4,100 for the second time this week. And then they bought it. And now we've been fighting to get positive. And every time we get to kind of flat, they take it back. They take us right back to 4,100. We have been flopping around 4,100, in between 4,100 and 4,150 all day, mostly hanging around 4,120. VIX briefly got over 35 today. It was really hit its high earlier in the week. And, if you're looking for a positive thing, it's going to be energy. Energy is strong. And what has really pulled the stock market out of the doldrums has been Apple having a pretty nice day, some strength in energy. And outside of that, you really don't have a lot out there. Google's mildly positive, a little bit of buying in Microsoft. But overall, the market still looks like it is not broken out of this bear market. Wednesday's crazy rally, which was then absolutely slammed the next day. I think Jem had it dead on that, that whatever happened on the day of the Fed, you want to take the opposite side for the next day. And that is what happened.
What were your thoughts when you saw that massive rally? Did that surprise you? And then, of course, had a polar shift. We had the glass half full right after the Fed, and then immediately after that, the glass completely empty. They're coming for everything yesterday to where we are today, of course, where we settled out. Were you surprised by any of that yin and yang on the street, sir?
I was surprised by the severity of the move, not by the move itself. I mean, we basically sell 4,300, and in the course of a day and a half, we've been back below 4,100. Incredible realized volatility in the market. You're wondering, hey, why is the VIX still 31 when we're only down 13 points? Yeah, the answer is because of the intraday volatility and the realized volatility in the market. We could still touch 4,000 a day for all we know, or make a crazy run back to 4,300. Who knows? But this is just some really bizarre trading, and it would be a fitting end of a week if we close after Wednesday and Thursday's craziness if the S&P closes flat on the day.
That would be perfect. If we're like up a point, that would be pretty much just what we've gone through over the past couple of years now to see these things, the massive swings, the intraday reversals, to finish unched. That would be just perfect. We were talking to the once and future Dr. Bix yesterday on Twifo. He suggested a good poll question for next week, which we may run with, which is, of course, everyone, according to our poll, at least a lot of you are out there right now, are in cash. Dr. Bix said he's been in cash since November. A lot of you are looking for that BTFD moment. So the question is, where is that? What is the low out there? We put out a poll that we discovered that we did back in March of 2020 obviously, March of 2020, a pretty historic period, listeners, where we asked you folks, the market was very similar to what we saw this week. It had sold off quite a bit. Then that week after the Fed announced their support for the market out there, we saw an 8% rally over the course of a handful of sessions. So we asked you back then, March 24th of 2020, did you think that rally had legs, or was that the world's biggest dead cat bounce? Could we make it to that 2,400 level? The mythical 2,400 by the end of the week. And of course, 73% of you faded that 2,400 level. So just keep that in mind when you're thinking about how low can we go. I'm not saying we're going to retrace down to the nadir of the beginning of the pandemic, but there is a little bit of froth still baked into this market. A lot of people are talking about, of course, that 3,700 level. That seems to be another support below that 4,000 level. But that'd be a good question. Maybe we'll put that out to you folks next week to see what you folks are thinking, especially if we end unched on the day today. That'd be a perfect topic for next week, because we are teetering on the cusp, on the precipice of something, listeners. And the question is, whither do we go from here? For the show, we're heading on into the futures realm, listeners, and we're talking to the MIAX guys last night. They are working hard on getting those futures even more active. In fact, according to Simon, he thinks they are few weeks away, if I heard him correctly. It was a loud room, listeners. A lot of people there to talk about spikes, which was good to see. But a few weeks away from getting approval on some of these ETFs they've been working on. And as we've all seen with the VIX landscape for quite some time, ETFs are kind of what drives a lot of the paper. Look at SIBO scrambling to get SVIX and UVIX, all these other ones back, because guess what? They drive a lot of VIX futures volume. And of course, commensurately down the road, some options volume as well. So the MyX folks know that they're looking to get those ETFs going. And once they have those going, which they think hopefully should be soon, then that will really kind of be the missing piece of the puzzle to really kick in. They'll have the options, they'll have the futures, tight markets on both, or tighter markets on both. And then the ETFs coming in to drive some flow. That's kind of really the trifecta that you need out there. So looking for big stuff from the Spikes futures down the road. VIX futures, it was interesting, Mr. Meatball. Looking at the numbers, by the way, we got the numbers for OCC this week from April. April overall, the busiest April ever in the history of the options market. Now, doesn't mean a heck of a lot. April, not a historically active month. Also a month, because of the holidays, has very few trading days in it, which is why the numbers are lower. I think we were somewhere below, I believe, 750 million contracts for April, which we've been talking about 900 plus million, 920, 930 for a while now in some of the other more active months. So that's April's obviously below that, but still a pretty active month. So that shows that maybe this party can continue for the volume in 2022, which is, of course, our question of the week. Get out there. You got a little bit of time left, a couple hours left over there at options if you haven't voted yet. But one of the other interesting nuggets we get out of that report is the futures, all the futures that they cleared at OCC, which, if you know about OCC, they pretty much clear VIX futures. Let's see, the numbers for April here, looking a little bit robust. We saw about 4.3, almost 4.4 million futures contracts going up in April. That's up about 1.5% from this time a year ago. Actually, no, a month over month, it was 3.7%. The ADV is up to 246 now. That's up about 1.5%. So modest increases, but still increases out there. And again, now that we see these new products that are back, the SVIXs and the UVIXs, and we'll get to those in a little bit, listeners, we'll see what kind of impact that can have on the volume going forward. Coming into this week, and again, these numbers, you could re-rack them constantly throughout the show. We try to just take a quick grab right at the start of the show and work with it there. But again, these numbers are fast and fluid, I think, to put it mildly. But of course, coming into the onset of the show, we saw obviously that front portion of that curve looking juicy. May was up nearly 3 points, about 2.9 points right before we kicked off the show. June was up about 2 1/3 points from this time last week. Of course, again, wait 5 minutes and that backwardation, and May was above everything else on the board. I got a feeling if we react those now, that would already be gone. So very fleeting backwardation. Mr. Meatball, what are your thoughts on the, at least short-lived for today, backwardation we're seeing out there in the VIX futures curve? Anything else that caught your eye out there on the vol surface this week? And also the notion that not a huge change, 3.7%, but still an increase in VIX futures for April, maybe perhaps boding well for them down the road now with the return of UVIX and SVIX, sir.
Yeah, UVIX and XVIX, and I know we'll get to those in a little bit. They've been doing, their volume has really picked up. And yeah, the VIX futures curve was very backward for a couple of days and then swung into contango for an evening and is now in kind of like a partial backwardation where we have the cash trading above the curve, but the May future is actually below June. But from June on, you're still in full-on backwardation. So VIX futures are not saying that anything is safe right now or that we're out of the woods, I would say.
Indeed, yes. The backwardation is so fleeting out there, but intriguing stuff. Obviously backward yesterday on the heels of that massive sell-off. Coming into the kickoff of the show here, Spikes Options, a lot of that paper we talked about that was on the show last week has gone the way of the dodo with expiration. They're, again, waiting for the ETFs and everything to really kick in. They expect to see a lot of paper. Also, our friend, the kind of four-way trader, he made his money, or at least his options portion of his trade did. Who knows what he had on against it out there. But he did all right. Remember, he was selling the put spread to buy the call spread. Took it off at a pretty decent level back one of the last times. We've been up here a few times north of 30. One of the last times we were up here, he took it off. So a pretty decent level for him. Obviously, unless he expects some more dire developments to come, which he could, he's probably not going to reposition for that four-way again up here, probably waiting for things to retrace. He had a chance, maybe, if you want to consider 25 a retracement. He had a chance earlier this week after that big, massive Fed rally, but not so much this week. So our top positions out here, we have the May 50s, June 70s, June 25 puts, May 25 calls, and then rounding out the top 5 in spikes options right now, the July pars, the 100. So there is some, shall we say, optimistic paper open out there in spikes options as well. Moving on to the big dog, which is VIX options. And, they're doing a little bit of paper out there today. Go figure. 310,000 contracts on the tape right now, which is a pretty decent number. Again, we've been through a few shocks to the system by now. So now, of course, we came out of the gate and we had these massive sell-offs followed by a reversal. And this was coming on the heels of, let's say, a quiet and tranquil August or December. You probably would see a lot more VIX paper on the tape because there would be shocks to the system out there. We've seen this a few times now, so the shock is somewhat muted. Still, 310,000 contracts, nothing to sneeze at. Probably going to hit their ADV, which is 477,000 contracts right now. That has actually ticked up again, up 9,000. You would hope it would tick up after a week like this, but about 9,000 contracts on the tape. There was decent VIX paper this week, perhaps not as much as you might think. We'll get to that in a second. But first, let's break down what's going on over there from an overall VIX options perspective. Looking at the top positions out there in VIX right now. What are the size open positions in VIX options here? And in the top 10 right now, only cost you 113,000 contracts to break into the top 10. We've also seen a pretty pronounced swing in the top 10. Last week, it was 70-30 calls over puts. This week, 60-40 the other way, puts over calls again. So a little bit of evolution in the top 10 out here this week. Again, number 10, 113,000 of the May 22 puts. Number 9, 118,000 of the May 23 puts. Number 8, $1.25 of the Nov 70s. Now we're getting back out to those quote-unquote fun strikes. Number 7, $1.32 of the May 35s. Number 6, 136,000 of the June 21 puts. Number 5, 142,000 of the May 20 puts. Number 4, $1.44 of the May 30s. A lot of May here, listeners. Number 3, $1.82 of the May 24 puts. Number 2, 219,000 of the May 25 puts. And still number 1 with pretty much the same size bullet that it has been for the better part of the last month and change. About 250,000, 253,000 to be precise, of the OC 75. So once again, this position is still open. Mr. Meatball, what are your thoughts on what we're seeing out here? The fact that these OC 75s and a lot of these other optimistic strikes still open for size. Don't seem like they're going anywhere anytime soon. And any other interesting paper that caught your eye this week, sir?
Yeah, what was weird was yesterday, Thursday, when the market was down $155, there were no calls in the top 10 that traded.
That is weird. That did catch my eye as well, and that struck me as odd.
That was really odd. And what that tells me is the fact that we don't see any profit taking out of this huge open interest at the 75 strike. When vol it won, VVIX never really getting off the mat. So vol didn't really go up, even though VIX went up. And then 2, this paper is still waiting for another leg down, and is positioning itself that way. The money's already hedged. The smart money is already hedged, and now they're lying in wait, waiting to see what is going to happen here. That's kind of my interpretation.
Yes, what leapt off the page to you also leapt off the page to me. No calls yesterday. Let's get there now. Let's start off with what's lighting it up today. Like we said, a little over 300,000 contracts on the tape today, which, let's see, what's breaking it out? What's lighting it up out there today? Number 1, about 27,000 of the May 25 puts. Number 2, we got to July. July 20s with about 22,000. Number 3, now we get back to some of the more optimistic papers. This is probably from earlier in the day if I had to wager. May 50s, 17,500 of those. Number 4, 13,600 the May 24 puts. Rounding out the top 5 yesterday, 13,000 of the May 27 puts. Yesterday, as Mr. Meatball was alluding to and also left off the page to me, first off, only 529,000 contracts on the tape. That's barely about 50,000 contracts north of the ADV. You think on a nigh on historic sell-off like we saw yesterday, you see a little bit more paper. Those are usually the days that tend to feed into a 1 million plus contract day in VIX. Again, we have seen these shocks a few times now, not perhaps to the 4+% in the NASDAQ level, but still, we have seen those shocks a few times now. So that probably does make the market a little bit more immune to that type of thing. But still, only 529,000 contracts on the tape on a relatively historic day, all things considered. And as Mr. Meatball pointed out, not a single call to be found. Well, you got to go outside, really. You got to go outside to the end of the top 5, and then you could barely find one. Number 1 yesterday was 55, almost 56,000 of the May 24 puts. Number 2, 52,000 of the May 25 puts. Again, all May. A lot of front month trading out there, listen, which is also interesting. Number 3, 27,000 of the May 27 puts. Number 4, 20,000 of the May 22 puts. And just sneaking in under the wire there, 17,800 of the May 35 call. So if you do look hard enough, you squint, you can find a call. But on a day like yesterday where we're popping, we're north of 30, we should A, be doing probably over 1 million contracts, and B, there probably should be a call or two trading out there, which again, as Mark was pointing out, people are hedged, not seeing these scrambles to the calls, which A, is going to hit the volume, and B, is also telling about where we are here in the show. All right, got to keep on rolling here to Wednesday. 523,000 contracts on the tape. Number 1 was 37,000 of the May 22 puts. Number 2, 29,000 of the May 23 puts. Number 3, 27,000 of the May 24 puts. Number 4, 26,000 of the May 25 puts. Number 5, 25,000 of the May 40 calls. All right, and then Tuesday, 587,000 contracts on the tape. Number 1 was 40,000 of the May 40 calls. Number 2, 37,000 of the May 23 puts. Number 3, 33,000 of the May 22 puts. Number 4, 31,000 of the June 21 puts. And number 5 on Tuesday, 29,000 of the May 30. So you got a couple of calls sneaking in there as well, but only 2. And then Monday was the big dog day of the week, at least so far. Today is not done, obviously. 610,000 contracts. So that in and of itself, again, Fed week, we saw massive moves 2 days in a row in the market, and yet not a single day even threatening, even hinting at 1 million contracts out there in VIX options. That also is very surprising given everything else we're seeing out there right now. Monday, the big dog day, 610,000 contracts, 74, almost 75,000 of the May 24 puts. Number 2, 48,000 of the May 25 puts. Number 3, 26,000 of the May 45 calls, 23,000 of the May 30s, and 23,000 exactly of the May 27 puts. Before I roll off of VIX, Mr. Meatball, let's have a fun diversion for a few minutes. Talk about something fun. All this drama out there. So driving through downtown Chicago recently, Mr. Meatball, and I see a big billboard in the distance, and it just says VIX. It says VIX and VIX.com. And I was like, that's interesting. Okay, I guess SIBO buying a billboard for VIX. Never really seen that before. I wasn't that close to it. Couldn't really read it, so I kind of just saw it and drove on. A couple days later, driving down another street in the city here, and I see one of those bus stop ads in the distance. Also has VIX and a little girl on it. And I was like, that's strange. But again, I was kind of driving by, couldn't really read it. So it wasn't until a few days ago. I finally am driving up a main thoroughfare here in downtown Chicago, and I see a giant billboard, and I happen to stop at the light right in front of it. And it says VIX in big orange letters. I was like, VIX, that's interesting. Different fonts, different colors. They're going for, I guess, maybe a new branding. It doesn't say anything about what VIX is, the volatility. And then I read the fine print below it. And Mr. Meatball, are you aware of the newly issued VIX? And what surprises me, they also got VIX.com. SIBO apparently never grabbed this. Are you aware of what this is, sir?
No. Is it a swimsuit company?
No, it is a massive 2-tier macro-scale Spanish language streaming service with more than 50,000 hours of content across genres for users in the United States, Mexico, and Latin America. It launched March 31st as the quote-unquote love child of Televisa Univision. So this is effectively the Latin America, I guess you can't really call it Netflix, but along those lines, the Latin American Hulu/Netflix/ whatever you want to call it is now VIX. And best part, they got VIX.com. If you go to VIX.com now, it is for the Televisa Univision streaming service. Isn't that crazy?
Oh, yeah, I'm on it right now. And yeah, that is crazy. I can't believe they don't own it.
It blew my mind. I'm seeing huge ads all over Chicago for VIX, and it's not even VIX. It's for a Spanish language Netflix. I don't know why they chose that acronym or how they were able to score VIX.com. That blows my mind that SIBO does not own that. Maybe they let it expire and that's where all this comes from. But yes, so next time someone comes up to you and they're talking about VIX, Mr. Meatball, maybe they're talking about their favorite Mexican telenovela. You don't know, sir.
I guess not. Well, I'll tell you, I believe I own VIXindex.com and SPXindex.com. So I think that SIBO needs to do some cleaning up on the pages they own.
Yes, they should be cutting you some checks right now. Oh, these folks should have been cutting you some checks. I just thought that was hilarious. Telenovelas on VIX. So yes, apparently, maybe you know this already, listener. Maybe you're watching VIX. Of our many bilingual listeners who likes themselves a little bit of VIX in the vol space and a little bit of VIX for your telenovelas. But that just cracked me up. All over, plastered all over Chicago, VIX, and it has nothing to do with the actual VIX. Just a bit of a fun diversion here, listeners, as we keep on rolling. Let's get out some of these much ballyhooed new products out there. Let's go out to SVIX first. Maybe that'll be the next SVIX.com. Maybe we'll take that next. SVIX was at about a 10 when we kicked off the show. Now it's about 10 and a quarter, so it has ticked up a little bit. It's still down about exactly a point from where it was last show. It was about 11 and a quarter last show. As Meatball mentioned, they are picking up a little bit in terms of volume. I mean, we're not talking lighting the world on fire yet. About 700 contracts on the tape today in SVIX, the ADV 245. Mr. Meatball, an interesting time to be watching SVIX, of course. I almost said Netflix. Watching SVIX because A, it just launched, so it's still kind of in that early period. It's still very controversial. Some folks are still angry that this thing even exists. B, starting to get a little bit more paper. And C, we're in a weird environment for it where obviously this is inverse vol. So as we're seeing these sharp spikes in vol, the question becomes, how low can SVIX get? And how does that impact the paper? So what are your thoughts on the overall performance you've seen out of SVIX so far through a few market shocks, sir?
Yeah, it's been active. Both SVIX and UVIX have done over 1 million shares several times now. They've really started to see a pretty big influx of activity. And so, yeah, I mean, I think it's absolutely interesting that that is what we've got. Trying to see the stats right now. So on the day, SVIX is already at 2.3 million shares today, and UVIX has traded 2.2 million shares. Its average volume is now over 1 million shares a day. So these indexes, these ETFs, we need to get these guys on because these are going to be a home run. We've already seen it. They're starting to take paper from UVXY. Now, UVXY is still 91 million shares traded, but they are definitely starting to take paper from UVXY and certainly SVXY. They're pulling paper from SVIX is going to eat SVXY's lunch. So yes, we are definitely seeing these things move.
Yeah, we're starting to see, like you mentioned, the underlying doing well. Have you slung any of these underlyings? I know you haven't traded the options yet. Have you traded the underlying, Mr. Meatball?
I've dabbled a little bit in the options. They're still a little wide. But man, there's a lot of juice in those things. The implied volatility is like sky high in these things because they move around so much. I mean, the 5-day range of UVIX. So starting on the 2nd, it reached a high of 27.21 and a low of 16.95 over the course of 3 trading days. And then here we are. It's got a high today of over 20, almost 26.5. And it's already back down to 23. The sucker moves.
Yeah, obviously, when you're diving into the options, listeners, still kind of wide, not exactly lighting it up, like I mentioned. SVIX ADV 245 contracts, so not blowing the doors off. Today, hitting about 700, so that ADV is probably going to pop. If you're looking at top SVIX positions, the biggest one is 263 of the May 11 calls. So read into that what you will. I won't burden you with the rest of the top 5 because it's all pretty small. UVIX out there, that's our other friend. That's of course the 2X, the levered VIX product, as Mr. Meatball was just breaking down, has had quite the saga already. Just today, as we're kicking off this segment, it's up almost a full point, about 0.9 from where it was this time last week. It's at about a 22.9 right now. We're seeing about almost 1,800 contracts on the tape. So that's a decent pop. It's already north of its ADV, which is 1534. So UVIX, as we kind of talked about on the show in the past, seems like it's going to outpace SVIX from an overall options volume, and it seems like it's doing that out there right now. In terms of action, what are people trading out there? Let's do a couple of top positions out here in UVIX. It's actually 1,000 open of something now, which is interesting in UVIX race. So it's wins the first to 1,000 on a strike race. That gets you to the May 20s. 1,005 of those are open. Then we got 810 of the SEP 15 puts, 500 roughly of the May 16 calls, 400 of the SEP 20 puts, and rounding out the top 5 in UVIX right now, about 400 as well of the SEP 10 puts. Looks like a bit of a vertical, 2010 put vertical out there in UVIX, which is kind of interesting. Have you guys had a chance to trade up UVIX or SVIX yet? Either the underlying or the options? Hit us up. Let us know. I'm curious what your experience has been like, but it does seem like they are starting to come online. And as Mr. Meatball alluded to, they probably will start eroding some of the other products, including this dumpster fire known as VXX. This thing, it has fallen off a cliff from a volume and an OI perspective ever since Barclays really started screwing the pooch with it. And that hasn't really mitigated yet. Coming into showtime, the ADV is 123. So it is up slightly, up about 5,000 contracts from where it was this time last week. Today, seems like you're probably going to get there. About 92,000 contracts on the tape right now. VXX, by the way, up about half a point. It was about 27.5 when we kicked off this segment here. I won't burden you with the top 10 out here, listeners, because there's not a heck of a lot really to go into right here. If you want to know the top position, let's do a couple of top positions. The top position right now is the May 18 puts, 48,000 for those, 44,000 of the June 16 puts, 37,000 of the June 20 puts, 35,000 for number 4 of the June 15 puts, and 31,000 of the May 16 puts. That's your top 5 out there in VXX. If you expand it to a top 10, you'll see it's still all puts all the time. So folks are fading these current levels of VXX out here for a lot of reasons. Some folks still clinging to that hope that Barclays is going to come in and say, hey, we have a plan for this product. And that's going to crush some of that premium. But not quite seeing that as of yet. And then our old friend, the former last of the Mohegans out there, which is UVXY, was at an 18 when we kicked off the show. Puts it up 1.25 points. It's down to about a 17.75 now, which puts it up about exactly 1 point from where it was this time last week. In terms of paper, doing some decent paper out there today. So it's going to take a little bit longer for those other new products to eclipse this one. Doing nearly 300,000 contracts out there today. So a decently active day. In terms of what's lighting it up out there, let's do a quick top 5. Then we'll talk about what's lighting it up out there today. Top 5 in UVXY. Number 5, 11,000 of the June 75s. That got to some of this funky upside. We've been seeing this really a lot since Q3 of last year. It seems like some folks awakened to this upside trade, and most of it is selling on these far upside strikes, listeners, because they're getting a fair amount of juice for these things, all things considered. 11, almost 12,000 of the June 75s. Number 4, 12,500 of the June 20 puts. Number 3, 13,300 of the June 10 puts. Number 2, 15,000 of the May expiring today. So the 6th, 14 puts. And the number 1 position in UVXY right now, 26,500 of the May 15 puts. Those are also expiring today. So those two are both going the way of the dodo. In terms of what's trading out there today, the big dog out there today, 16,500 of the May 20s. These are going out today. Pretty much everything's going out today. 15,700 for number 2 of the May 19 calls. Also, again, going out today. Number 3, 11,000 of the 18 calls. Number 4, 10,500 the May 17 puts. And number 5, 10,400 the May 18 puts. So a lot of paper, all going out today, all centered or close to the strikes that we are at right now, which is right around the 18 strike. Mr. Meatball, I think catching your eye out there in UVXY or everyone's favorite dumpster fire, VXX. And are you still working some downside flies in VXX on the off chance that this thing returns to sanity, sir?
Yeah, just because there's been, and it's been profitable actually to play it because it's underperformed on the way up and kind of outperformed on the way down generally. And so, yeah, I've been playing around with that one. Yeah, UVXY has been flying. It is like UVIX, seen a ton of volume, ton of option volume. It has been up and down and all over. And so that is why you're definitely seeing some volume there today.
Yeah, UVXY has certainly been moving this week. We got down to, looks like 14 On Wednesday, got up to 19.5. We've had ranges all over. It was 19.5 to start the week. Then we were starting to threaten those 13 and 12 handles again, it seemed like, for a brief period there, then right back up again. This one's done a lot of living. If you're wondering why vol is so high in UVXY and these things are so rich, you try and come out here and try to scoop puts or whatever the case may be. That's why this thing is moving around all over the place. So I get it. You guys end up having to want to do flies and things to be able to pay for stuff, and then you blow through your fly strikes all the time. That's kind of the risk of UVXY. You pay for the full freight if you want to buy something, because selling a lot of premium out here can be challenging. And then, of course, it costs a ton, and it moves in the other direction, wipes you out. And we've seen it happen on expiration day so many times. Or you do a fly to mitigate some of your outlay. Then, of course, it blows through all your strikes in a minute. UVXY can be a heartbreaker. Will remain to be seen how this one continues to perform in its popularity in the face of these new products. You folks out there still slinging UVXY? You a little bit intimidated by it right now? I can understand that if you are. It's quite the beast to come to grips with right now out there. Speaking of coming to grips with, let's see if we can come to grips with a little bit of earnings vol. I'll be chatting with our buddy, Mr. Matt from ORATS next week at the OIC conference. See if I can get him on Vol Views again, because we are coming through the maelstrom that is earnings season right now. You guys know where to go if you want a lot of data in your hot little hands, all completely for free, because we like you folks. You guys can get earnings trades, earnings season, earnings move, and earnings move results reports. Did it all backwards there for you. Right over there, theoptionsinsider.com. Just click on the Options, News, and Articles tab to begin your journey to the dark side. If you did that for this week, you would see a lot of names popping off. We had Berkshire kicking it off on Monday, as well as Six Flags, what's going on in the amusement park vol. Tuesday, we had Pfizer, BP, Hilton, AMD, Airbnb, S-Bucks, Lyft, Caesars, Match. That's just on Tuesday. Wednesday, Moderna, CVS, Marriott, Uber, Marathon, eBay, Etsy. Thursday, Crocs, so plastic shoe vol. DoorDash, WWE, what's up with the old W's, and Yelp. And then today we have DraftKings, Goodyear, Under Armour, Cinemark, and a whole bunch more. We have move results reports for some names that were popping off. Yesterday, we'll hit a couple of them here. We have eBay. They were yesterday after the bell. I should say the fourth after the bell, so going into yesterday. And they were at 54, almost and a half when they went into their announcement. They were pricing in 8.2%. They delivered 8.9% out there in eBay. Of course, these measurements, listeners, are all in the immediate blush after the earnings. That's what they're measuring there, that kind of earnings vol impact of the actual announcement itself. Obviously, if you hold on to these for a longer period of time, your frame of reference changes. But we're looking at kind of the immediate earnings impact. It has sold off more now. It's down to 48.39. So if you did hold on to it longer, you are seeing more. You're probably close to 10% now. So you have outperformed that 8% straddle. Etsy, let's see, they were on the fourth after the bell as well. They were pricing in, about 13.7%. They were trading at 109 and a third going into their announcement. They delivered 13.6%. And that was pretty much almost exactly in line with what they were pricing in. And then, of course, we have seen an aggressive sell-off since then. So if you held on to Etsy, it is down about 8 handles from where it was right after the announcement. So you have seen quite a bit of extra vol. If you were along some premium out there, then you have seen a decent move in your favor. Again, it's all about frame of reference out there. Let's see, who else do we have the reports for here? So many, listeners. You guys can check these out, theoptionsinsider.com. I'm trying to find some of the big ones for you here. We haven't talked about pizza vol in a while. This would be pizza, Papa John's. They were yesterday before the bell. They were at 92.75 before their announcement. They were pricing in 6.4%, listeners, and they delivered 1.7%. So that is a dramatic underperformance. Of course, again, frame of reference is all. As looking at it now, the stock's down from 94.36, where it was when we ran these numbers last, to $88. So if you held on to it yet again, the macro wins. The rising tide lifts all boats, and that dramatic sucking down sound we heard yesterday sucked down all boats. So a pizza a wee bit lower again. So that's going to mess with our frames of reference a little bit out here. We still have some names popping off here. We had Dash after the bell yesterday. DoorDash, 81.65 is where they were trading. They were pricing in $11.50. In the past, they had moved only $8. So that was quite a bit of extra juice they were pricing in. And right now, it looks like they are $72. So they have, looks like, pretty close to it out there, and actually a little bit less because they're $11.5. So they have bounced off the lows, so they're 72 just right now. So a little bit of underperformance, pretty darn close to what they were pricing in. Let's go one more really quickly, just because we always talk about it on our Monday show. Let's go to WWE. How much wrestling vol is there out there right now? Let's find out together. They were yesterday after the bell. They were at 61.5 going into their announcement. They're pricing in 3 3/4. In the past, they've moved nearly $5. In the past, they've been a bit of a banger when it comes to earnings. And right now, they're off 1.5%, and they are trading down. Looks like about exactly $3. Yeah, because they were 61.5, and they're just hit 58.50 right now. So they have underperformed their already lower straddle. So guess not a lot of vol on the earnings front out there, at least for the wrestling. Here's the headline. Everyone's got to run with this. WWE Body Slams quarterly earnings. Of course they have to run with that. Meanwhile, listeners, we have to run with some of your questions. It is time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility voicemail. You guys know how to get at us by now at Options, most of the major social media platforms. Questions at theoptionsinsider.com also works. If you're in our pro side, you can hit us up in the live chat. Use that special members hotline as well to get at us. And we always bump you folks to the top of the list. We have MU asking in our live chat right now, what would you guys be buying the S&P at if you are new to the market or in cash? I like that question. What we were talking about earlier in the show, MU, which is what I was alluding to. I think that's going to be our question of the week next week, in which case I don't want to weigh in on it too much right now. I don't want to color the results. I think that's going to be our question of the week next week, and then we're going to have a chance to get into that in a lot more detail, I do believe, next week. So I'm going to table that discussion for right now. I want to make sure everyone has a chance to weigh in out there in the audience first before we start analyzing the results. But that is a good question. In many ways, that is the question of the moment. So I think we'll be weighing into that one and wading into those waters very soon. So stay tuned. We're going to table your question for a few days, but we'll come back at it hot and heavy next week. Don't you worry. All right, speaking of hot and heavy and asking their audience, last week on the show, we were asking you, we're back in the red in the S. How are you positioning in your broad market portfolio? Gave you 4 choices. You're still long. You're just kind of riding this out. Or you're long, but with a put or some other hedge. Or you're in cash waiting to BTFD. That's the portion we're going to be talking to next week. Or you're in or moving to crypto. And about 36% of you said you're in cash waiting to start BTFDing. 32.8%, so right behind it, saying you're kind of riding this one out. If that's the case, I don't know. I'm a little concerned for you out there. Maybe you want to have some sort of plan in place. Obviously, if you have a long time horizon, it will balance out. But in the near term, you're listening to a network like this, there are some things you can do to perhaps offset some of that. And then you're long SPY or the S right now, but with the put or some other hedge, 25.4%. Only 6% say you're in or moving to crypto, so no love for crypto out there. This week, we're asking you, all this madness, the Fed, Ukraine, inflation, it's all conspiring to keep options volume pretty high. We just saw the numbers for April. They're pretty strong. Last year was obviously a record blow the doors off year, almost 10 billion contracts. Can we possibly do that again this year? That's our question for you. So it's very simple. Yes, more than 10 billion, or no, we won't hit 10 billion. Mr. Meatball, what are your thoughts on that question? Can we hit it? And what are your thoughts about, that's a good question the week next week to do with the, where do folks want to BTFD right now, sir?
Yeah, I do think that's a great question. I've got my levels in mind, I'll be honest. And I'm sorry, what was the first question?
Can we hit and beat that 10 billion level worth of options volume that we hit last year, sir?
We can. I don't know if we will, but we can. I think that if you see the market completely fall apart, that's in play. Now, the problem is retail traders have been absolutely crushed by high beta names getting smoked. And that is that was a big driver of option volume. But you look at the SPX adding daily options, that's going to be a huge driver of volume. I think this is going to be a great year for index options. Don't be surprised if index options break their all-time record this year.
We are seeing resurgences there as well as in ETF options. ETF options are up like 55% from April of last year. So a huge resurgence there as well, which is pretty much what carried the month. Overall equity options volume was actually down a little bit year over year, which is kind of fascinating. So yeah, stay tuned for that question. By the way, the results right now, this is expiring right after the show times. I'm not sure if podcast listeners will have a chance to get one more vote in or not. Probably not. 61.5% of you say yes, we will eclipse the 10 billion mark this year. Only 38.5% say no. Want to hear what some of the pros have to say about that, including Mr. Flowmaster and others. Check out the recording I put up there on the network of that panel I did a few weeks ago here in Chicago with the Flowmaster and a bunch of other great people out there to kind of weigh in on this topic and a whole bunch of other fun stuff. I kind of took a little surreptitious backroom recording for you folks so you folks can hear it too. So if you want to check that out, check it out. It's over there on the network already or on our special events feed as well. Let's squeeze in one more question here. Let's go to Alero. Alero says, new listener alert. Well, welcome, Alero. You are far from alone. A lot of people are discovering the world of vol. If it seems overwhelming at first, don't worry. Strap in. We'll get you there. Stick some time. He wants to know, I'm trying to come to grips with some basic terms in the vol market. One I'm still struggling to find a good definition for is the difference between realized and implied volatility. Can you guys sum it up for us? Thanks. Well, yeah, there's a lot of different ways to break that down. If you want a very simple way to think about it, realized is also called historical, right? So that's looking back. That's vol looking back. The vol we've already seen. Implied is looking forward. So it's what the market is pricing in going forward. So that's a very basic way to break it down. Implied going forward, historical or realized, you're looking in the rear view mirror. That's going to be always very accurate because we know exactly how much vol was exhibited. We can measure that precisely. Going forward, implied is going to be a couple of things. A, it's going to be usually higher than your realized or historical because market makers don't have a crystal ball. They don't know. They have to price in a little bit of fudge factor, a little bit of wiggle room to see. So it's kind of their best guess what the market's going to exhibit from a vol perspective going forward. It's usually going to be higher, usually somewhere in the indexes, and usually around 3.5% is your average, what they call risk premium. It can get higher, obviously. It can get lower. That's kind of the ballpark average, which is why guys like Don and others who are on this show in the primordial ooze days used to always talk about harvesting that risk premium and why it's always better for, in their perspective, to sell options rather than buy them. Options to him are to be sold or not sold, never bought, because of that inherent risk premium out there. So that's a very basic way to think of it. Mr. Meatball, anything to add here for Alero, who's trying to come to grips with realized versus implied volatility, sir?
Yeah, no, I think you laid it out pretty well. Implied is kind of what the market thinks could happen, and realized is what has happened. If the option pricing model wants you to use forward volatility. Well, here's the problem. No one knows what forward volatility is. And that causes some problems for traders. So that's where implied volatility comes from. It's kind of what option prices are saying forward volatility is going to be. And that is, kind of how we approach things. Realized volatility, I think you can look at it in different bands, and it can give you different information. The other thing to remember is that both of them are long-term mean reverting, and that is a really important thing to always remember.
And this show always reverts to the crystal ball at the end, so let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. And this show is just a great example of how fickle the vol gods can be this week. In particular, a great example of that, listeners. Once again, the markets, as we were talking, it seemed like we talked them back down the ledge again because they are selling off yet again most of the major indices. They were looking to threaten unch. We kicked off the show. Now S&P down off over 0.75%, Dow about 0.75%, and NASDAQ off 1.4% or so out there. So back down to the dark side. It means vol getting firmer again. Spikes was at about 32, almost 32.5 right now, about 32.40 as we wrap up the show. VIX at almost about 31.15 or so right now. So VIX is actually still a little bit lower than where it was when we kicked off the show, whereas Spikes has continued to pop back up. And of course, all this is a long way around to saying this was a crazy week. I think all of our vol predictions at some point we were all right until we weren't. I was feeling the most vol of all of us last week, which was kind of interesting. I was at a little bit north of 29.25, about 29.28. We were looking good. It looked like we were heading that way until not quite so much. Again, VIX a little bit north of 31 right now. Spike's not looking good, so I'm outside of the wheelhouse. And I was the closest. Nobody else was close. Jem, he was saying 24 after the announcement from the Fed on Wednesday. We got close. We got 25 and change, so we didn't quite get there for Jem's prediction. Then he thought today would be 28.5. So not quite there either. He's farther away. And then Mr. Rock Lobster was even farther away than that. He was at 26.5. So no winners. Looking at some of our, we have a listener on the mute, 35-37. That's not bad, but it's not it's closer than the Rock Lobster. But it's not a winner chicken dinner either. Yeah, we got 30, and that's not enough. Yeah, I'll have to have our producers go through all these listeners and see if there's any looking at a 30 half. That's not bad. Again, you have to be within a tenth of a point to win, listeners, so that's not going to do it for you. But it's not bad. That's respectable out there. So we have a bunch of submissions here. We'll go through all these, make sure. If you are a winner chicken dinner, we will let you know what fabulous prizes you have won. All right, Mr. Meatball, that's a long way around to saying no winners this week. So I will be charitable and allow you to choose when you want to go. Do you want to go first or you want to go last, sir?
I'll go first.
All right, have at it, sir. Don't you say 22-22 right. Again.
I'm not doing 22-22 this time because I'll tell you, I think next week we're going to see the VIX into the 40s before we maybe by Friday settle back. And I'm going to say 31-31.
VIX in 40s before settling back to 31-31. All right. Interesting level. You like your alliterative numbers. If there are such a thing. 22-22, 31-31. All right. So, yeah, we could do a lot of living over the course of this. 31-31 is pretty much exactly where we are right now. I wonder where you got that prognostication from, Mr. Meatball. But, yes, a lot of living can be done. I've been famous on being more on the upside of late here in vol. 31 is a rough level to sustain, but if we keep some of this movement up, I think we can. So I'm not expecting a heck of a lot of downside in vol coming up. So I might actually say a wee bit higher as well. I'm going to come in. Let's see. Again, these levels are so high that they can't maintain it. We could see them. We could be right in the morning of the show, and by the time the show kicks off, it'll have dropped 3 points and we're gone. So that's the challenge with prognosticating some of these higher levels. I'm going to do it. Listen, I'm going to go out there on that ledge. I'm going to say 32, 35. Oh, well, we're at 34. There we go. 35 for this time. That's our market. 31-31 for the meatball and 32-35. A lot of room for you to come in between. You got another prognostication. You're feeling lower. You're feeling higher. Hit us up. Let us know. You know the deal. If you get within a tenth of a point, you too can win fabulous prizes, listeners. All right, Mr. Meatball, we did it. We survived another hour in this mad, insane world that is volatility. As soon as we wrap up the show, of course, something crazy will happen and vol will change completely again. That's just par for the course with this show. But before we go, Mr. Meatball, if folks are intrigued, they want to hit you up, they want to ask you vol questions, where should they go? What should they do?
You know what? I'm writing a blog on VIX and volatility trading every day. Go to optionpit.com. And look up the VIX Edge and the Pit Report. I write some pretty good content there every day. Last night or this morning, we were pointing out all that VIX options flow that didn't happen and how we were trading.
And there's a rumor that I may see you in the San Antonio environs next week, sir. Is that correct?
Yeah, and you're definitely seeing me in Chicago. So we're going to be doing
2 weeks of the meatball back to back. I don't know if I can handle.
We're going to be doing Vol Views live, I believe, on Friday at my conference at the Drake Hotel.
Ooh.
I believe. Isn't that correct?
I think so. I'll have to see what the plans are in place. But yes,
we got to get your executive producer. I believe
yes.
Me and your executive producer arranged that.
I'm just the pretty voice here. I don't do all the planning. That all happens.
Yeah, you are. We all know who your boss is. And also, Mark, we should say we shouldn't leave without wishing our wives a wonderful Mother's Day and say thank you for everything they do for us. Basically, you and I would just be a mess if we didn't have them, and they are just absolutely best, and they've helped us raise 3 collectively amazing children. So thank you, moms all around the world.
Well said. There you go. Well said, sir. Avoid us getting in trouble any more than we already do out there. Yes, happy Mother's Day to all the mothers, all the ladies out there who like a little Vol. We love all of you out there. Of course, you guys know where to go to learn more about all things spikes. MyAxeOptions.com/spikes is the place to go to learn more about all that goodness. I was talking to Nick yesterday. He was at the event as well. He's excited to be putting out a lot more quick strike and quick skew data over there on the MyAx page. So he's pretty excited. A lot of cool stuff coming to that page. MyAxeOptions.com/spikes is the place to go to begin your journey. Unfortunately, if you're one of our many on-demand listeners, this concludes your broadcast week. I want to thank you all for joining us. Of course, if you're in the Secret Club Hangout, we'll be back in a little bit to break down the world of unusual activity with Options Oddity. Should be a fun one this week. And of course, for all of you out there, have a great weekend. Stay safe. We'll see you back here next week on Monday for the option block. And of course, I'll be traveling a bit for the OIC conference next week. So the middle of the week, it's going to be a little bit crazier from a live schedule. Then back again on Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's Volatility reimagined. Learn more about Spikes at MyAxeOptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.